So today we're talking about RA and how to best enter positions with understanding risk. So this is going to be stuff that we've been working with and dealing with in the mentorship sessions lately, and we've done quite a bit of work on this. So there's a really neat way that we can look at RA and risk in assessing these different positions. So we're not going to get into too much technical analysis today. It's going to be purely based on risk. And, I'm just going to mark some trends here. I'm just going to update my charts a little bit while we do kind of this introduction here. I'm just going to start adding, your daily levels here. Just some daily range trends, nothing groundbreaking, nothing major, just want them on my chart so that in the case of during today's session, while trading is happening, we see something happen that we can discuss it as time goes on. And really you've got, your levels are already hit here. And yeah, just to rewind this back a bit, we can talk through as well as some of these different levels that were on the chart. And what I do want to add actually is one more trend here, which is going to be the one that we had yesterday, because this actually has a lot to do with what had happened on the charts as well. So I believe it was here. And yeah, so we're going to start by walking through yesterday and discussing kind of what happened, because we rewind to yesterday morning and people were asking, like, I've gotten into this short here and that's a good short. And, I'm thinking about exiting on this 1 hour level, and that was never the right play. And again, we're not doing technical analysis too much, but rather I would like to discuss some of the things that happened. So rewind back to yesterday, people are talking about getting into shorts here, and that was a smart idea because the timeframes are failing, and that's fine. Failing timeframes is another lesson for another time, but the regard of how you trade them when they happen is pretty important. So yesterday we started the day in a session there in the open chat and just said, like the first target here is 40,700, and if that can't hold, then you're going kind of down to some of these lower ranges here. You've got some kind of hold levels in here, and I'm sure you've got some kind of combination of polarity that happens maybe from this point or even deep diving to this point. If you were to go through these time frames and find where that polarity exists, you would find it. And it looks like it was here, but that broke. So you're more so right here with this polarity. Like that was your polarized moment. This was the only trend that was there. So this was kind of an origin level, and this is kind of in and around the area where you want to be looking. If that range is going to hold up, this is a pretty decent spot to do it. And maybe it goes for a backside front side combo level here. You've got the backside 4 hour or the daily front side here. So you've got a few different combo levels inside this range which you could go after. And the reason why we're adding these is we're going to discuss these possibilities with risk assessment. We're also going to start looking at some of the lower levels. So we're just going to start this off by marking kind of what we see as relevant levels. And I'm just going to go with what I have on my chart and discuss that. I don't want to spend an hour fully marking up this range because it would take some time to go through the range and fully mark it up properly. Instead, what we're going to do is we're going to focus on some of the timeframes and levels. And as always, we just start with your highest time frame, and that'll be the weekly. And we're not going to have anything on the weekly, so we can almost immediately skip that. You're going to have a daily origin here. You're going to have a daily origin here. That'll be another spot. You're going to have one right here. And I would just like to start by adding some of these daily origin levels. So you've got a daily origin right here that could be created. You've got one right here that could be created. And I want to just start by doing that with all these levels. You've got this is not created, so I just simply don't want that one there. And while we're on the daily time frame, let's just check kind of the trail of levels that had happened and hit. And you've got that there and that there. So this could be a potential for a reverse as well. So dashed lines being origins, solid red being holds of some type. So you've got a 4 hour there, combo to the daily. You've got what could be an origin here, hold level here with a origin already created here. So this is a confirmed origin. This is a test of an origin to create one, and so forth. And let's just keep moving down time frames here. So you've got a 4 hour right here. Is that hard closed? It isn't. So we do want to add this as well. So you've got this right here as a 4. So that'll be pretty important for us as well to kind of waterfall or cascade our time frames down, right? You've got 4 hour right there. You've got one. We're just going to add this one here because within this range, you've got almost the same thing. You've got one right here and you've got one right here. So that's perfectly fine. We only want to add the one inside that range that really is going to be used. Looks like you've got one here. Maybe. Let's take a look closer. Yeah, you do have one here as well. We're just adding everything so we can get a good analysis on this move, right? And you've got an hourly there. You've got another 4 right here. So you've got those there. You've got this 4 hour right here. You got another one. Again, we're just adding every single level. We'll start removing after and reducing after to increase what could happen, possibilities, things like that. For now, it's just about marking what we can see on our charts. And let's actually go look at hold levels as well. Is there any trail? So now we're going to start from the backside of this. You've got a hold level hit there. So then you move over to this one here. So I'll just visually create that trail for people to see where we would want to start, just kind of understanding which levels do we need to keep on our chart and which do we don't. You've got this here. Hits, gets reversed there. For this reason, we can see that it's reverse levels now. So now we can just simply go to the next untested hold level right here. Well, it would be tested, but that's your reverse level right there, right? And then so you'd be on this next one right here. So that's your next reverse right there. And at a point where you're going to hit this reverse, I would simply remove it because we do have a different time frame being hit here on the 4 hour. I would simply remove this because you're not going to want to see, hey, I hit a 4 hour level, but just secretly I also have an origin level, and the difference in price here is not enough to warrant having both of them on your chart. Like you're not, I would fail to see, in a technical sense, you should have both, but I would fail to see a scenario where you would hold the 4 hour level here at 34,215 while hard closing 34,290. You would have to be within a 22% range, hard closing at a minimum of 4 hours and 1 minute. If this happened, 1 minute away from the 4 hour level closing. Um, and actually it would be 8 hours and 1 minute because you'd actually have to have a candle close where the top of the body would close underneath the 290 level, while also creating that accumulation candle and then or distribution candle and then closing the hard close candle in distribution. Like you're talking about 8 hours for, like it's not reasonable. I can't see any trades that would make sense there, regardless of how technically it could be accurate. I fail to see how you would ever have a trade there. So let's just remove that off our chart instantly. And we just break the trail there. It's no longer needed. That's good. And really, we're only going down to the hourly time frame here. I just want to use those 3 time frames and take a look at what we have. And 4 hours, so we're not marking the one. You've got an hourly here, which would be apprised in this range. It's hard closed there, so you have nothing there. So that whole entire piece is gone. You have nothing here that could represent a hold level. You've got the daily there. That's not 2 candles. That's hard closed here. You have nothing there. This is a 4 hour, so there's nothing there. That's not an hourly. There's an hourly rate here, so we can add this, although I think this is a little in vain, if I'm being honest, because of the same types of reasons. I don't really see where you would drop a daily, skip the 4 hours, and target the hourly. Is it possible? Yes. Would you ever take a trade there? No. You would be taking your trades on the 4 hours. So at a point where you would be wanting to take this hourly, I don't think it makes sense to completely skip over a time frame like that, where in a case where you lost this daily, you're going to go down, then you're going to hit this. Meanwhile, ignoring the 4 hour, which is the next time frame down, holding this and getting above this. Can it happen? Absolutely. Anything can happen on the charts. Technical analysis shows us where we take all the best spots and how we can have laser accuracy. But does this mean it's a good trade? Does it make sense to take a trade here? No, absolutely not. So any spot that you would take a trade here and not here do not exist. You're always taking the trade here. And if you're missing this trade because you're losing this 4 hour and you're like this, you're never getting in the trade anyways. This is too risky to take, because at the same time, if you lose the daily range, you open yourself up to, or the daily origin, you open yourself up to the next time frame target down. So you're just opening yourself up anyways to that next time frame target down. But the hourly here is skipping that time frame. So I don't see a scenario where you would ever buy this, but not this level here, right? I just don't see it. So it's just like it's a little bit in vain to mark that level when you should be targeting the 4, because if you don't target the 4, you're going to completely dump the move anyway. So like we just remove that completely. And then there's nothing there. Oopsies. Like this one might be viable. That was a backside. It already got tested and held the move. That's fine. So this is gone here. Is there any cause for hourly levels here? Your next hourly would be right there. That trail continues. Your next hourly would be here. You do have an hourly hold level here that's kind of okay. So let's take this and let's go here. There is a trail of hourly levels here that are being hit. Now, I haven't moved to the front side of this chart yet to see if there's anything else that goes through it, but this is not bad. At least it can act as a combo to some type of range. It's okay. It's not great, but it's okay. And so for that reason, I'm going to leave that one there. 2 candles there. That's the same thing. You've got a kind of a combo set of origins here, like daily for hourly marked. So you kind of got a combination there. That's fine. There's nothing that touches this one here. Nothing there. You do have something here that could actually represent the laddering on this move. So you do have one here that I would like to add. And you can see as I'm going through timeframes here, it's getting lower and lower and lower, the possibility of kind of what I'd be looking at. And actually it's right here. So that's actually okay to move that back to there because it's almost one and the same. And that's actually the real origin there. So that's fine. You got the 4 hour here. You could potentially have a daily here as well. But I do like this daily for a different, or this hourly for a different reason, because at the very bottom of this range, you would be attacking two levels for a 36% spread. So this is just like some very initial charting of the next range. We've got a lot of levels here that we're looking at and a lot to work through. So we are going to tackle that in the second half of this, but the first half of this, we're just going to walk through what had happened at the first part of this, where that short had come and kind of what some of these levels represent. And oh, good. It looks like Bitcoin's moving down to our next targets anyways that we had marked. And it looks like it's trying to hold something now that we have marked. And that this is perfect. This is perfect. So starting this move, we are going to discuss this from the short yesterday as people had been in this. And, it was just, there's only certain targets that can be hit here. And we're going to just start by defining the time frames. You have an hourly, you have a daily. Next on your list is a 1 hour level. So you're kind of staircasing levels here, right? You're going from an hourly into a 4 hour, into an hourly, into a 15. And really, the definition of Pandora's box or mirroring here is that you bounce between these targets. You bounce between 4 hour to 4 hour level, hourly to hourly level, daily to daily. And that's your mirror. That's your Pandora's box 2.0. Go on the skill tree to learn about Pandora's box 2.0 if you want to know more about that. But that's what you have here. You have exactly what every single chart does at all times. You have timeframes targeting timeframes. And when a daily targets a daily, it creates a perfect scenario. You have, for example, let's just pretend this is red and this is red. And you have a daily level or, a 4 hour level targeting a daily level or a 4 hour level. And all things are equal. And that's the way that charts work, and timeframes target timeframes. And then when you see something laddering down is when you see a daily hit on the bottom and then a 4 hour hit on the top. And then the daily has to create a 4 hour level, and that 4 hour level creates this 4 hour level rejected it, and then an hourly rejects this 4. So you kind of have almost like this staircasing of levels, where on the bottom side of a chart, you're saying, oh, a daily needs to hold a 4, which needs to hold a 1, but these are being offset because this daily really should have targeted a daily on the top. So that daily is already offset by that 4. And then that's fine. So then you have kind of like a pseudo kind of mirror in between, where that 4 hour level holds up from the daily because it has mirrored, but then that 4 hour target needs to be hit again, right? Because you can't have a daily be offset by a 4 hour. And then if you were to ladder up, the 4 hour hits, holds, and then you go and target the 4 hour on the other side, because then you would at least be equalizing the bottom range to say, hey, we're laddering up timeframes on the bottom side of the range, but we're mirroring the interior range. Almost think of it like global, legacy, and local, right? And so this is a very, very easy case to see why this short exists. When you start looking at the bottom side of this chart and you say, hey, look, you've got these 4 hour levels here and these daily levels, and you had a daily level here that was hit, and then it was continued here. That opens up your range to say, hey, you need to go after another daily level. And on the bottom side of the chart, you need to start laddering 4 hour levels, and then you need to create a 1 hour level. So this was very easy to see. If you have a daily level here that propagates into the 4, that goes into a 1 hour level, if that's all being offset by a 15, this 1 hour level is going to break. It's not going to hold. That the 4 hour had already tested to equalize to at least target that on the top side. So this 15-minute level is actually just kind of breaking the entire trade. So now you need to start thinking about risk. So now that you have a clear picture of what's going to happen in this trade, if this 15-minute level holds, you've also got the hourly trend offsetting this 4 hour level. You're never buying the hourly level here. It's not realistic. I don't like it as a trade. I don't like trading levels where you're saying, hey, I held a 4 on the bottom, but got offset by a 15 or a 1 hour on the top. You're just losing time frames. It's how ladders exist, right? So the 15-minute hits, perfect. Everything is great. This is yesterday when we left off in the charts at about 8 o'clock in the morning. And it was like, oh, if you're in a short here on the 15, you need to stay in this thing, because you are now losing the daily, you're losing the 4, you're losing the hourly. You're going to go down and target the next daily and kind of all that stuff that exists down here, right? So that's fine. Everything is equal. And now you start measuring what the difference could be. Like, the only thing that you could have done in this trade is measure to the daily, continue to hold the daily, and that is it. So where can you even engineer trades off of this thing? Well, you start measuring all your levels. So let's do exactly that. You have a 15-minute level here. You have, which the 15-minute level could have mirrored this target, by the way. The 15-minute level could have been a legitimate target. So can you enter on the hourly or the 15-minute? Well, when you start measuring down, To enter on this hourly, you have a 30% spread. So for me, a 30% spread is way too much, especially being that we can drop all the way to the daily here. So if you're sitting here trying to justify a trade on the hourly, you need to measure to all of its possibilities. You've got, and if a 4 hour was the only possibility here, hey, great, 38%, you cover 3 levels. The hourly, yeah, might not be such a bad buy. It can actually hold up the chart here, offset that 15, ladder the bottom side. But the reality is 38% isn't the spread of the levels here. 38% is not it. The spread of the levels is actually all the way down at 94%. So you can't take any trade on the hourly because you have a spread of levels that are going to liquidate you. And even if it didn't liquidate you, I like to target levels where the spread is like maybe 20% max and you're hitting 3 and 4 levels at once. So then we can measure from the 15. Does a 15-minute trade make sense here? Well, the 15-minute trade, if it falls really fast, you're still getting liquidated. If you were to come out to some area like this and this 15-minute level here, and we can delete this one because that was the trail. And this is where you're looking at, okay, here's a 15-minute level, hit perfectly here. Here's the next one here. Here's the next one that can hit. It already tested the level on the backside. That's fine, but it still has a front side test that it could do, right? Like it still has your front side test right here, right there, right? Like it can still do that. You've laddered this. You did kind of technically ladder it, but it doesn't mean it still can't hold. So you delete this automatically instantly. And if you were coming out here and you could cover the spread of all of these 3 levels for like 30%, yeah, it's getting a little riskier. Maybe out here, 27%. Yeah, okay, that's where the hourly makes sense because at least you're in a position where you're saying your risk will never liquidate you. And in a worst case scenario, if you see you can't gain this level, at least you're able to exit very easily and very cleanly. So the fact that how fast this thing drops, like you cannot take any trades here. Can you even do it from the 15? The 15 only covers you to the 4. These levels won't do anything because once you start getting below this, imagine losing and hard closing a 4-hour level to gain a 1-hour level. Like there's a disconnect in the time frames there, which is another thing. If you need to know more about disconnected time frames, go to the skill tree. So you can automatically just like delete these levels even then. So you're really measuring your risk either to this interior range right here. If you are certain the hourly is going to hold, which being offset by the 15 after laddering a 4, I would at least as a minimum want to test the 4-hour. Maybe you can sit here and justify the hourly test, but I sure as hell wouldn't be entering a trade there. Maybe I would look for this to stabilize and then re-enter on a 15-minute time frame. So maybe I would look to say like, okay, if this hourly can stabilize like this and you create some kind of 15-minute time frame, yeah, sure, rebuy there. And then that at least you can play the long on that side. But to justify this trade here doesn't make sense. To justify this doesn't make sense. The 4-hour doesn't make sense. Even the daily, it's like you can't enter a trade there. And that's a big part about being a professional trader is understanding the possibilities of what can happen and then where trades that make sense are to take. Because we can all mark technical analysis. We're all very good at it now. We all know my science well, but that doesn't make you a professional trader. And it doesn't equate to taking smart trades. So understanding risk at a deeper level is being able to take your trades and to find the ones that make sense based on risk. So again, this can never be a smart trade, nor can it be a good exit to your short for that exact same reason. Rather, you'd almost want to create a trail of trigger points from this 15 where you can see the theory offset by these levels here, either the hourly or the 4 or the hourly to recreate the 15, and then you can trigger out, or you just simply wait till your targets are hit on the bottom, which is exactly what you should be doing in a scenario like this. Your hourly is hit, fine. No reaction, doesn't surprise me. If you got in on that hourly, you should be getting the hell out right there, which I am a strong believer that this is not a good trade. This just the risk is way too high, the risk profile on this. So that's fine. Thank your lucky stars you were able to get out. And there's a reason why you instantly drop to this daily, because again, it's the only thing that can really hold your time frame. And rewind even a couple more days ago when we were up in this part of the range in mentorship lessons, and we were talking about the move from back here and over here, and the whole entire point of all of these trades where once you lose this daily level, you need to lose this and rebuy the back test. So that's something we engineered in mentorship from far back, because once this loses, the whole entire move collapses. Again, technical analysis lesson for another point or for mentorship, but the whole idea behind this is that like you lose this trend, you must buy the back test, because you're just going to fall off a cliff on this trade. And so that's why this can't make sense. So then you start really looking at what can you trade? Can you trade this origin here? While you got a 41% spread to the exact same level. So imagine you have a greedy 1 minute hold level here in the range and a greedy 1 minute level hold here. So for example, you have like kind of like a double part of a range here where you have a greedy 1 minute hold here and then you have one here as well. Like, which one are you buying? Are you buying this one? Why? Like, can it hold? Yes. Does it make it a smart trade? No. When you start looking at, hey, if I have to cover both levels by 38%. Well, what about the possibility where you also target the origin, or even the further possibility where you target a little bit of a deep dive? Like, these are all liquidations where you enter a trade here. You could technically be right that this chart is moving up, but you target the greedier level, and inside of that greedier level, you hold the level to create it as a reverse because you deep dove, laddered the trend. These are all trades where, yes, the chart is holding up, but guess what? You're getting liquidated on any level up here. So it falls under the same thing. Like, just because the level's there, you need to understand, like, does this make sense? Does this level make sense? And you can easily go and see if it makes sense. Go and look at where the levels are and the wicks are and how far it can go in the move. If you're, we'll go to a 4-hour chart for this and just take the replayer tool and cut that right there, right? If you're in this trade, this isn't an established origin yet. So can you deep dive this down to here? Absolutely, because then you hit the origin right on the nose. So anything where you're measuring even from here, where does that become? Your risk becomes, well, 24%. Let's just say that's arbitrary, right? The next one part of this trade is that if you have a daily here and you need to ladder above this, well, how much is that spread here? Well, you've got 38%. So this level can never cover the wicks here. It can almost even never cover most of where this trade could go. So for that reason, you can never take this level. You could buy it, but if you don't have some kind of crazy bounce, you need to get the hell out. Like, will it have a bounce? Yeah, probably. But does it make it a long-term trade? No. Like, I would never enter a 1 minute hold level with a hold level below me, like another 1 minute hold level in the same range. I would never enter that when the next hold level is 30% down. I would rather see that hold level, or even this, stabilize, create some kind of time frame where I can rebuy and it goes up and back test that. Yeah, sure, that's a safe trade. But we have to always measure all possibilities in the move against the percentage of where they can go. So then we go back to this part of this trade here where we can just hit play. We can see where the short exists. That's the short. That's fine. And there's that back. First off, there's that test of that origin. And this is, if you were to enter that, this is an automatic exit on the backside of this, or this is an automatic enter short, because as soon as this rejects, like, you should literally be here looking for, like, literally this as your last stop entry on this short. Again, technical analysis for another lesson, doesn't have anything to do with risk, but just to put out the point that this was showing you that this move is failing. So it invalidates anything here anyways, which you should have never been on a trade here anyways. You keep going in this move. This target gets hit, pulls back up, exactly what we talked about, can deep dive to hit the next target. This target gets hit. Imagine losing a daily level and your 1 hour information holds you up. There's a gap in your time frames. It's separated. You need to go hold some 4-hour information for that to hold, right? Like, if you are losing a daily, you can't just gap time frames like that. There's a reason why none of these can hold, because they're not the 4-hour time frame. If one of these had held, like if this top level or this secondary level had held and been able to break back up over trend, sure, that's great. But that's not the case here. So none of this makes sense. Now you start getting into the timeframes that can actually hold this move. So now you get into measuring, oh, look, you've got a daily level here. It covers this 30%. So could you theoretically buy a daily information, a daily data point? Could you theoretically buy that and it also covers the 4-hour? You just lost the daily, so your 4-hour would kind of have to offset you if you were to hold a daily. So as a minimum, you need to hold the daily. You just lost the daily. You can't go and hold a 4-hour time frame underneath it. You only offset these things when you start holding the same time frame or one time frame bigger. Like, if you just lost an hourly level, you're never going to buy a 15-minute hold level. You're either going to go by the 4-hour hold level or the hourly hold level as well. Like, or if there's something bigger meta wise, then you're going and saying, like, we lost a weekly level above, now we need to hold a weekly as a minimum, or at least the time frame that makes sense, the weekly or even one deeper, right? You lose a daily here, there's a 4-hour can't offset you. So now you have a decision between two levels. You have this level here, you have this level here, and you start measuring the spread of them and looking at the actual levels themselves. So you've got 75%, so you can't take both levels. You have to pick one or the other, and which one makes sense here. So we can go take a look at which one makes sense. Well, first off, this is just a trend, a daily trend. I would not be buying a trend here for the simple reason that you've already lost a day. You could lose a daily level here, and then you could just ignore this trend altogether. Your 4-hour information here, I also wouldn't be buying this level in that moment. Maybe if as time goes on, this could hold and move up. But really, that's where that target from yesterday comes in our short that pulls back from 42, whatever it was, 42.4, I believe that one was here. Yeah, 40. Oh no, sorry, 42.8. Really, that's where this comes into play. And then you have to measure. So like even this as a trade, this daily information, I don't really think it makes sense as a long. Is it a good target for a short? Yeah, for sure. But is it a good target to enter a long? No, actually, the good target to enter the long would be the final level here, would be this. But with that said, it's just a trend. You could deep dive trend. So now let's talk about that. That's not a level that you buy because it's an origin. You could deep dive this trend as long as you hold over it, but that would just end up creating a range trend from here. So this is kind of it. You need to continue this ladder in this move. So you wouldn't be going and saying like, oh, can I buy this 4-hour level here because it covers the daily? 40%? No, because it can just ladder off of this. And even that would create the slightest range trend at 80%. You'd be liquidating. You can never buy this level. Can you buy this trend? Well, I guess this would be the final buy that you could do, because if this level fails, it's all failing anyway. So if you were to set a trade here or here or here, even if you could cover the spread, so even if you could come out here right to this point and say, I can cover all three levels without getting liquidated, 37%, even if you could do that, that's the only spot you would take the highest level, because you can cover the entire spread of the move, and you have every single, if this move fails, all three of these trades are failing, whether you're buying here, whether you're buying here, or whether you're buying here. If this range fails, it doesn't matter which level you took. They're all an instant flash dump liquidation regardless. So you are wrong, which is just, was this a correct trade? Yes or no? No, it was not the correct trade. You were wrong. The difference is here, you could hit this level, hold the trade, buy this, be correct about it going up, get stopped or liquidated out of your trade, and then it moves up. And that's really where your risk measurement comes in, because now you can sit here and say, like, does it make sense to buy this level? Well, not really, because you can still go down in the trade, get liquidated. As time is going on, as you are sinking into this trade more and more and more, you can start to buy those levels, right? So let's just kind of go and take a look at what's happening right now on the charts. So that's fine. You bounce your levels, everything is good. Your technicals are like perfect on point. Yeah. You go and you hit that level, and then you have move up. And I'm just going to fast forward because something's actually happening in the trade right now. You continuously hit your other targets backside, which is fine. That's one of the levels that it's rejecting, which is fine. It's not a technical analysis lesson. You hit your other target, you hit your daily, that's fine. You hit that, and now you're going, and again, you're doing the same thing where you're trying to use a daily and offset it by a 4. It's not going to happen. You're not going to use a daily level and hold the 4-hour level. You're going to need to hold either a weekly now, or you're going to need to hold at least a daily so that you can build the 4 to hold. So here's a daily level. If this ends up holding, so this automatically invalidates this 4-hour as a trade, because you cannot lose a daily and then go after the 4. Like if you were in this trade because you took this 4-hour level, yeah, there's a good chance you're getting liquidated. Actually, if I go and zoom in, I'm pretty sure I didn't even measure this properly. Yeah, that's really close. Like some exchanges will liquidate you on 58%. Some of them will liquidate you on 65%. I don't know. Maybe you weren't liquidated, but is this a good trade? No, it's a ridiculous trade. Why would you ever take a 4-hour level if you just lost a daily? You need to lose a daily. You need to buy a daily or have something even higher hold it. If you just lost a 4, you can't rebuy a 1. If you just lost a 1-hour, you can't rebuy a 15. If you just lost a 1-hour, you either need to buy the 4-hour or you need to buy the 1-hour. So you can never buy this level here. Could you possibly have bought this? Yes. And would you be scrambling for your exit like immediately here? Absolutely. This little wick up here, like you would be scrambling for an exit now. If it holds, fine. You have a 1-minute level here. It holds, but really it invalidates this completely automatically. You cannot buy that for. I would be scrambling to get out of this trade. Just like I said yesterday, the target has not been hit on this trade yet. Let's look for this 1-minute level here. Yeah, you can't even get over a 1-minute level. I would be getting the hell out as soon as I hit that level here, and I would just be exiting with an 8% loss. There's like, bang, I'm out. I don't care. I'm out of this trade because this is not worth the risk here for me. This is being offset by a much larger time frame up top, which is the weekly. I don't care if this goes up or not. I care about the risk associated with the trade. When I see stuff like this happen, you hit the level. This just almost looks like back test re-entry, perfect short territory to dump the move. And that's fine. And so like, yeah, I would be out of this trade. And this is how we use risk to measure things. And then even like, okay, so we know we lost the daily or the weekly. How can we go and target a daily on the bottom? And that's where you start measuring what levels make sense. And now, just as a disclaimer, I don't know if I marked all these levels correctly because I didn't sit here for an hour. And before we even talk about that, by the way, this is the exact scenario we talked about. We could just slightly ladder off of this and that could still validate the move. So again, for many reasons, your 4 hour doesn't make sense here. You never buy the 4 hour. It just doesn't make sense. Now, I didn't go and do a huge amount of technical analysis over here. So could there possibly be levels I missed or mismarked? Yes, absolutely. That's not the point of this lesson, is to go have perfect technicals. The point of this lesson is to go and talk about risk. So now you need to understand that you're offset by some weekly information up here that I have deleted off my chart. So there's weekly information. So now, even as a minimum, you should be thinking about weekly levels or some other bigger time frame stuff, which again, I haven't marked, but then we can at least use the same theory to start talking about, well, what makes sense here? Can this 4 hour ever make sense? Well, let's go take a look. We've got nothing really on the daily. We know the weekly is just a bunch of white candles. We don't even need to go back there. And for any of you who didn't see, it's just like a bunch of white candles. There's no real weekly information we can garnish off there. Possibly we could have like a daily origin somewhere. And there's one right here that I forgot to mark, which I will put right now. This daily origin is where I would be kind of setting my first target. And you look at this and you say, you measure from here to here, 87% liquidation, not worth it. Even if you were to go straight down now, in what world would you ever go and back up your target against? And let's just maybe zoom in here because we're getting a little wonky with our time frames. In what world would you ever target this when you have an origin here, and that origin, the obligation of it is to just stay above the ladder point, because it just, as long as it doesn't hard close, and that's a backside. So we can even go, as long as we hard close above this backside, actually, that's all we need. So this could go all the way down here, and you could be minus 80%. As long as you climb back above and close above this backside, all you're going to end up doing is having a wick here, creating a range trend that holds. It creates support somewhere off a reverse, and then you get a range trend. That's fine. None of these trades make sense. No trades on this trend make sense. No trades here make sense. You start measuring, doesn't make sense. This could deep dive as long as it closes above. None of this can make sense. It can combo to the stuff inside of whatever levels are there. Even as this daily level, what is this daily level? And can it even make sense, right? Like, can we even make sense out of this daily level? I really honestly like this origin, and this origin targeting the 4. I don't like that. But what I do like in this scenario is this origin creating this daily as a reverse for the range trend. So again, you can't buy this daily because this daily will just bring you into liquidation territory. Can you buy this? Yeah, this is a good target. 37,257 becomes a good target because you know what? You're actually starting to set up what it needs to gain on the other side, right? There's liquidation to the next level. So I think you have to make a decision here whether, and that splits every level in your chart in half, by the way. That tells you that, like, if you're going to buy this level, it's going to fail. If you're buying this level, it may not fail. This may not fail, but it can also have, it's like you're back into that same scenario of 1 minute level greedy, 1 minute level greedy, all within the same range. Why would you buy the second greediest level when you can just go for the greediest? And if the second greediest level held it, why don't you just take the rebuy? Right? So then you're really just measuring the possibilities against risk, right? Can you ever buy this 4 hour level? Well, if this daily data point is going to break, it's also going to break this because it's a time frame below. So you're either going to be right about this level and this one, right? Or you're going to be wrong about both. So if you're in the scenario where you're right, this level holds and moves up, and the scenario where you're wrong, this doesn't protect your trade anyways, because the point to the next liquidation is here. Now, if this level was something like this is a spot where I would buy the 4 hour level, because this is a spot where if you're buying this level here, it's the same. It's just a greedier level. That's liquidation. Doesn't make sense. This level could hold the trade. You bounce to this 30%. You create the range trend off here. Yeah, this 4 hour origin all of a sudden makes sense because it covers both levels without having to miss anything, because you could bounce this level straight up and go straight up. Or like the worst case scenario is you have an order here and you're like, hey, I'm going to make this order. That's going to be a great trade. It's got the range trend that it can create, yada, yada. All the TA is makes sense. It bounces this and you never get into the trade, and then you just slightly miss it. Had this level been lower, and you're going to potentially get liquidated on that trade in order to enter this, then yeah, it doesn't make sense to enter this 4 hour. And this is how we analyze risk. And this is how we mark things. We have all the levels that make sense. So the first place you start on with your chart here is making sure you have all the correct technicals. And then you start measuring what your timeframes are telling you are allowed to happen against where you could be liquidated. And that's where you're going to see where the best trades exist, because you're going to be able to say, I'm hitting all parts of the range. The time frame that it is going to hold this, it's either going to be in succession or failure. So it doesn't matter where I set my trade, as long as I can stay in the trade, because if it's in succession and that level hits, as long as it can't back target anything lower that would liquidate me, that's where I want to enter my trade. And then there's nuances into the lower levels. Like if we were to go into something like, I don't know, we're just going to pick like a random spot. Like, okay, fine, right here. This looks good, right here. Let's just like look at this part of the move right here and start, putting some of these time frames down. And this would be a nice little example here. So what do you have here? Okay, well, let's start with this. You have a daily level here. So you have a daily level here. That's fine. You can measure it right to the daily body as well here and say like, what is starting to make sense here? It's a full 1.5%. Like there's going to be certain levels that do and don't make sense here. Have a 4 hour, you've got a combo level here. That's fine. We always use the wicks for the combos. You can even use the backside here for this one. Go into the hourly. You've got the hourly backside combo level to here. This is your hourly backside, right? That's your hourly backside. You've got, 15-minute levels, and then, you've got untested 15. And we're just going to leave it at that. We're not going to deep dive too much into this thing. Actually, you know what? Screw it. We will. We'll go all the way. This should be orange, and that's the wrong color. Oopsies. No, this should be green, right? That's our 15. Mismarked to this blue one. There's like a weird blue color there that I don't use. 5-minute levels, right? What do you have for 5 minutes? Do you have anything? Yeah, you've got this down here, the wick here. So that's fine. Now you have like at least a spread to work with. Now you can sit here and say like, what makes sense? And if something gets held, all these other levels are invalid, because this gives you kind of like the perfect information, doesn't it? If the daily level holds, why would you lose a daily level and go target a 15 or a 5 in your range? That doesn't make any sense. The best you can hope for here is the 4-hour data point. Why would you lose an hourly? And that's another, like, let's not get too hung up on Bacont. You said you can't target a time frame down. That this is true, but I'm just talking about it as a 4-hour data point. This would be a possibility of what could happen. Again, not going to get into the technical aspects of that. This is just about risk. But if you hit this daily, all of a sudden, why would it make sense to take a 4-hour level here or an hourly here? So you have to start measuring your spread. Like, you've got liquidation to these levels, so they can never make sense. So had this daily not been hit, this daily doesn't make sense as a trade. Does the 4 hour, can the 4 hour make sense? No, well, no, because it's going to liquidate to hold the range. Can the hourly make sense? No, not really. Can the 15? Yeah, the 15 can make sense, because you know what? You can play the range without liquidating. And if you're right, you're right. And so then the 15-minute, what we would do is we would just go find the highest data point in the 15-minute. We would just simply go to the wick and we'd say, oh, that's the trade that plays the entire range, all levels, doesn't liquidate you. So if you were to take one trade in this range and forget that test of that daily is there, if you were to play one level in this range, you're measuring all the levels and saying, look, this doesn't liquidate. It can hold this level up. So if we are to drop straight down, this is probably the best. Now, you've tested the daily here. So that pretty much just takes off all other possibilities, because you're not going to go hit a daily, hold a daily, and then be like, oh, guess what? We held the daily. Haha, just kidding. Now we're going to hold the 15-minute level, unless you wanted to say, you can hold this part of it because it's still holding the daily level. So now you could at least have some type of measurement from here all the way down. For me, 50% is way too large. Even 30%, I don't like taking trades on a 30% spread. It just becomes way too much of a risk on failing levels with negative implications on exits. So now can we measure this to this? Like 30%? It's still a lot. I don't know if I would take 30% trade here, because you could also just back target like this part of the range down here and you're in liquidation. So like none of these levels actually make sense to take. So if you are going to take a level, you take the 5 or you take nothing, because there's just too much of a spread. Like, look, if your 15-minute level was here and you're talking about an hourly level right here, and you can sit here and say, look, I can cover 3 levels, 3 time frames, all within 25%. Sure. But when you're starting to talk about, 25% just between 2 levels, possibility of 3 levels here, 70% liquidation, how do you take anything but the 5? And with that daily hit, you don't take any of them anyways. Let's just go hit play here and you'll see exactly what I mean. Actually, maybe not. I don't know. I haven't actually looked at this part of the example. Daily's held again, right? A spot where, again, 4 hours missed, front run slightly. Well, you know why now, because if you're measuring the spread to this 50%, like you're already hitting a daily. Why would you go and back target a 4? You're either holding this daily over time or you're just not, nothing's happening in this trade. You're never targeting the 4 hour. And that's why this sinks through every single part of this range, because a daily can't target these levels, right? It's the same reason why like a lot of this stuff down here that we looked at, like the daily went and targeted the daily level. Like daily targets daily. Like it's very simple as that. Origin up here, Pandora's box down there. You have the daily here. Well, of course you can't buy any of this stuff. It just lost a daily. How do you expect it to hold any of that? Maybe it ladders off of this, and like I said, the 4 hour data point, can it ladder? Yeah, sure. And it did ladder over top of this, creates a little micro range trend. So if you want to get into your trend work, I wouldn't have bought this level. I wouldn't have taken that trade. But if you did, at least you have the right intel to say, look, you've got daily to daily, and then you can go here and you can mark this daily here to there. And when you start hard closing this trend here, I'm sure you can go to like some pretty small time frames here and see like, oh, even if you were to start marking these time frames and you hard close here, and what is the largest time frame we have available? It's not even a 15. What is it, a 5? Yeah, it's a 5-minute there. You hard close adapted to here, so you're already cycling this trade anyways. You're already cycling down. You hard close adapted to here. You've hard closed it to here. Do you even have a trend anymore? No, you don't. You actually don't even have a trend anymore. So there's nothing left other than to gain this hold level. And when you hard close that hold level, like GG, it just rips down. Oh, of course it does. Like, of course it does. Like, yeah, 4% move down. You just lost the whole move anyways. So, we could just go here and hit play, and yeah, of course, back test the 4, and the rest is history. We've seen the rest and what can happen here. And I said I would not be taking this stuff down here. Like I said yesterday, your targets exist down here. This is your first target here. If this can hold it, sure. But that's why, because there's a certain risk measurement that makes sense here to this. So understanding risk and risk analysis and where to make good trades. The most important point of this is we all can mark technical analysis, and that's fine. You mark your technical analysis, you go through, you find your levels, you understand what makes sense on the chart, but logic flow is going to be the dictator of what makes sense. Just because it's on the chart doesn't make it a good trade. The measurement of risk allows you to see, should I enter this trade? Yes or no, very clearly. And you measure your levels just like we did down here. You measure where you can enter the trade at the greediest point while still being in, while still being right, and never taking levels that can hold that part of the range, but also liquidate you, because that's the worst thing in the world. When you take a trade here and it goes like this, you stop out here just to see it go like that. We've all been there. But this is why it happens, because you're measuring risk against the possibilities of time.